Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of Stock Index Futures. I'll start with UK FTSE Futures. As a reactionary bullish harami yesterday to the previous session's significant bearish long black Maribosa, the market tried very hard to punch its way back up and out of the January to date breached rising wedge pattern, so that prices managed to move over both the March 2020 high at 68.71.5 and the upper trend line currently 68.90 of the rising wedge pattern. Unfortunately, there was no close over either yesterday, and it continues to look as if last week's move up and out of it may have been a false break. This now puts in doubt all the targets topside, and that's target X in the 70-10 area, the target for the January to March sideways triangle, target X1 in the 70.95 area, the target for the late January, early April rising wedge pattern, and target X2 in the 71.15 area. That's the full target for the rising wedge pattern. There's one final matter, something I highlighted yesterday. We are now on for a weekly key reversal up this week. Or let me just rephrase that. We're now on for a weekly key reversal this week. If we close Friday night either above 69.75 or below 68.78, then we'd be on. Right now, we're actually looking like a weekly key reversal down. However, there is still the rest of today and tomorrow to contend with. Additionally, closing in between those levels could make it a lesser outside week. So far today, a higher open and an attempt to cross over the upper wedge trend line, but we've since fallen back below both the March 2020 high and the upper trend line of the rising wedge. The weekly key reversal down is still on. German DAX Futures. A bullish harami yesterday. I suppose this is a response to the previous session's bearish long black Maribosa that closed below the very recent bullish Andrews pitchfork. That's from late January to late February. Yesterday saw the market try to move back up over the lower time, currently at 15.259, managing to do so but getting bogged down in the early April congestion between 15.200 and 15.289 and closing right on the time. This is an important close, making so far the breach below only a one close breach and not yet, at least, a full break below the lower time. I should also point out that support below is limited. We only have the short moving average currently at 15.178 below, and that isn't that strong. We have seemingly little further support until the mid-March high in the 14,800 area. The next decent support is the late October 2020 today uptrend currently at 14.687, but please note this is still only a 2-pointer uptrend. So far today, an attempt to get back up and over the lower time, but it's limited. I suspect the congestion between 15.200 and 15.289 may have something to do with that slow ascent. US E-mini S&P Futures. A bullish engulfing pattern yesterday, a reaction to the recent bearishness, and a move back up over the middle time, currently 41.44 of the broken but seemingly still important late December 2020 to very early February 2021 bullish Andrews pitchfork. Now, as I mentioned yesterday, the move below the middle time was not a crucial move. The move back, the way it was done, the move back up the way it was done, is seemingly a reinforcing case for the bullish incentive that this market has enjoyed for some considerable time now. It was indeed actually the second highest close of all time. Now it'll be interesting to see if the market tries higher towards the all-time high at 41.83.5 and the projected 50% Fibonacci line at 41.82 that caused the halt there of that rise. Meanwhile, below we have the lesser Fibonacci congestion at 41.06 and 41.10, but the next support of note is the old projected 50% Fibonacci line at 40.82, though I'm not so sure how that strong will be. I'm not sure how strong that will be. Now, so far today, A slightly lower open, but then nothing. Looking like an indecisive doji cross right now. French CAC 40 futures. A reactionary, bullish harami yesterday, just after the previous session's significant bearish engulfing pattern and bearish opening long black Mariposa. The significance yesterday and the day before was not the pattern itself, rather it was how prices punched down through and closed below the important lower tie, currently 61.40, of the December 2020 to January 2021 bullish Andrews Pitchfork and its nearby partner, the short moving average, currently at 61.44, and then yesterday pushed back up over the lower tie and closed back within the bullish Andrews Pitchfork. This pitchfork has brilliantly driven the bullish incentive higher since its inception in late January. As I've said for the last 5 weeks now, and I quote again, all is moot until prices move out of those ties. Well, it seemed 2 days ago that the mooting was coming to an end. Well, not so yesterday. So far today, a higher open, over the previous all-time high from July 2007 at 61.69. Then all we seem to have done is form an indecisive doji cross today. Well, at least so far. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.